All right, let's take a look here at the S&P 500, and this is your S&P 500 daily TA, and actually it's the week ending April 27th, 2012. And let's take a look at the chart here. We've got all kinds of marks and lines and colors. It looks like Walt Disney threw up on here, but trust me, it all has meaning when we draw it out here. And this chart has been dead on since we created it a couple of months ago. So let's take a look at the S&P 500 again. Let's just go over where it closed last Friday. 1403.36 got as high as 1406.64, traded as low as 1397.31. So technically we had a tighter range on Friday to set things up. This is the chart that we drew, and you can take a look at the past updates and see how all these lines and so forth got here in this channel. What I want to do right now, though, is take a look at where this chart's going to go, and take a look at especially the levels from March where we busted out over the top of, actually February, where we busted out over the top of this channel, and then through here. So let's right now get rid of this, and we use stock charts, and let's change this from, instead of the full year, let's go back 3 months, and let's change our chart. And I just want to do this while you're seeing this on the video, so now you can get an idea of how this is annotated, so that I'm not just showing a chart that you don't have an idea where it was created from. Okay, so now we've made the chart smaller, and now we want to look at this area, and we've still got these lines and so forth, and now we can get an idea and look closer and see the February low here, but see the 1330.52. Again, this is the channel, so let's use a different color here, and let's extend it. And when we get into technical analysis, it's amazing how these channels, when they get created and when they extend, they have lots of merit. So let's extend that. This line here just shows that the index could break out, so really not much to do there. This is showing the RSI. We'll also look at the volume decrease. We'll get into that in a minute, but you can see here that this volume here on the onset, or at least looking at it, we do not like the fact that this index has gone up on decreasing volume. That is bearish, and that sets up for what we call a dead cat bounce, or a fake move inside the oval here. Inside the oval here. Okay, so as we see here, the 50 RSI. Now let's do a cross trend on this chart as we get into it more here. 1422. Let's cross trend down here with this blue line, and let's take this recent high and cross that there. And here is what I want to set up, and I think the index next move is on the TA is this cross trend area right here. And how about that? It is right inside, and we've talked about this over and over, right inside. Oh, that's too big. You see it immediately if some of you other technical analysts already have seen it. There it is. Very simple. The cross trend of the 1422 recent high on the index, along with the recent low on the index, with the cross trend, sets up almost perfect to retest this 1386.96. And I really think that, again, just like what we looked at in the NASDAQ earlier, the fact that this Bollinger Band topping right here, and it doesn't matter by how many points, as long as it's under it, that 1420.02 is underneath the 1422.38. That high, according to the Bollinger Band and the buyers and the funds, should stay intact. So worst case scenario is we're going to get what you could call a head and shoulders increment top where you've got one left shoulder, a higher left shoulder, a head. You're going to have another right shoulder over here potentially. You already have one. So this breakout here, I don't think we break 1420. I think that level is going to hold. We could be done with this target, this range already based on last week. It came on declining volume. I don't like to see that. Technical analysts don't like to see that. But 1420 being the top of the Bollinger Band, that's going to be the absolute worst high. We could get there. It's going to depend on where the futures are setting up here, even for tomorrow, because Monday will be a big day here coming up as we set up with the futures when they come out. But if you take a look at this inside this circle here, again, as we come back down, let's just take a look at the retrace on this, and that'll give us an idea. And what we want to do is look at the golden one of this range right here, all the way up to the 1420, and there you see it. As long as 1384.51 holds, which is the golden retrace, which is right here of this entire range, we're still in a bearish move higher, and we could go higher on the index. So that's the level. I'll get rid of it because we've got two green lines there now. But that's the level we're looking for. So the cross trend. So here's how your TA looks for Monday, April 30th, tomorrow. We're going to be looking for the middle of that Bollinger Band to be the key spot to strongly consider buying back into the index. And we're going to look at any level that holds over this 1403.79 area, and that's right there. So if we open up a little higher, any level that holds over that, strongly consider buying, because we could get the move up to 1420. But I just do not see 1420 being busted. And again, I'm looking at 1386 being the next spot to bounce. We'll see if that holds, but the cross trend states that it's going to create a move here that's going to be a lower low, and we're eventually going to go down here to the 1370 area, but that's to come. Again, if we hold this middle Bollinger Band, it is over the 50-day moving average, so that's what we'll be looking for. So that's how it sets up tomorrow for your Monday, April 30th S&P 500 TA. This has been Tradeco Trader. More to come.